welcome to another episode of Reinventing Finance with my co-host Tom. Today, Tom and I are very happy to welcome Roger. Roger, welcome to the show. It's a pleasure to have you.
Thank you for having us. Thank you.
Maybe to kick things off, why don't you briefly introduce yourself? Who are you and what do you do?
Okay. Well, I used to be a strategy consultant and working solely for banks and insurance companies in the domain of digital strategies. And well, basically I was creating new digital companies for our clients. And clients think of Zurich, Baloise, Allianz, and in banking, ABN AMRO, for instance. And well, at some point, I started to realize that whereas banks really embrace fintech, there is a lot of opportunity for insurers to do that also with insurtech. They hardly used the latest technologies to accelerate their innovation. And we also found that there was a lot of opportunity to connect people with insurtechs from abroad, because basically their view of what was available in terms of new technologies sort of focused on what is available in their own country. So that's why we decided to connect those two blood types. We launched a first conference as a one-off that was in Barcelona back in 2016. And
really cool conference, by the way. That was a really cool conference. That is where I caught the conference bug. It was amazing, by the way.
Yes.
Done.
I think for everyone, it was the first time that something in this space took place. And also the city, of course, has its attraction. And it turned out to be something that we thought about a year, should we do it again? And then we decided to do that. And well, basically that's when DIA took off. So we now had 8 conferences so far. Of course, last year was a bit a strange year, but the essence of what we do is to connect insurance leaders with fintech, with insurtech leaders. And that's what we're about, also using different media than just conferences.
Awesome. Thank you. Thank you so much. So would it be fair to summarize you in insurance insurtech connector? Is that part?
That's basically one of the things I do. The title of your podcast is also really fascinating, because together with my co-founder, Reggy de Feniks, we wrote a book 10 years ago that's called Reinventing Financial Services.
No trademark dispute.
It's just one word away. And that actually did pretty well. We sold more than 100,000 copies in 8 languages. And 2 years ago, we published another one, Reinventing Customer Engagement, the next level of digital transformation for banks and insurers. And well, that's doing pretty well as well. So, it's basically the connecting is one thing. I'm an author, and I also do quite a number of speeches in boardrooms, but also in conferences and business schools, etc., etc.
Cool. Roger, thank you very much. You've alluded to it, and for those of you who haven't yet caught the insurtech bug, DIA stands for Digital Insurance Agenda. And you've alluded to it that 2020 was a bit of an odd year. So are conferences dead?
Well, most conferences were certainly dead in the past period, but you could say they are sort of in a zombie state. I think that would be the best way to put it. Well, to speak for ourselves, thanks to COVID, we had to cancel 2 conferences, DIA Amsterdam in June, DIA Munich in October. So that definitely cost us revenues. But given the circumstances, we actually had quite a good year. And what helped us was that we already had several products and services in place, which were not related to events. As I mentioned, the core of our business is to connect insurance executives with insurtech leaders. So what we did is, and what we were already doing, is publishing editorials, interviews, white papers to build brand awareness for our partners. But we also do matchmaking services for insurers who want to get in touch with, say, 5 insurtechs to solve a specific problem. And we can help them select these 5, having over 2,000 insurtechs in our insurtech database. And what we did immediately after the outbreak is expanding into a whole new range of new services, everything virtually, and all based on what differentiates us. So, which is high quality content, high traffic platforms, and high quality network. And I can give you a few examples if you like.
Please.
So for instance, every week we organize so-called virtual roundtables, which are exclusive, intimate events, which allow our partners to share their vision to a group of 8 to 10 selected insurance executives. We also have DIA TV, which is a video platform for everything related to insurtech and innovation in insurance. It sort of looks like Netflix. You could say it's inspired by Netflix with playlists and all that. And like these playlists, they feature demo videos about claims, for instance, or UBI or core solutions or thought leader videos, etc., etc. And combined with our YouTube channel, we now have already more than 10,000 views every month. So that's still growing. It's really becoming the prime channel for insurtech. We're about to announce also another new initiative. So you have a scoop here. We teamed up with the University of St. Gallen, and their business school is the #1 worldwide in insurance science and risk management. And in September, we will have the first edition of an online executive education course that we've developed together with them. And it's called the next level, the next level of insurance innovation in the age of data. And basically, like it centers about on all the new data streams, the new technologies, and the need from a customer side to become much more relevant to those customers. Well, like these events that these initiatives that I mentioned, that don't mean that in my view, we've seen the end of physical conferences. We're sort of more like hibernating, I guess. Mm-hmm. So, because like everyone we speak to is really craving for meeting people in person again, for physical events. And we are too, huh? So there's no question about that. So we scheduled our next in-person events, DIA Munich, to take place end of September 2021. That is like in a couple of months from now, during Oktoberfest. So that should be a great incentive to go there. And we hope that that DIA Munich 2021 will indeed take place, of course. Huh? But this depends, of course, fully on government measures and vaccination schemes and corporate travel restrictions and what have you.
Roger, thank you very much. I'd like to share maybe one or two observations and then one or two hypotheses around conferences, and would love to get your, and Tom, obviously also yours, 2 cents on it. So my observation today is that people are getting more effective at kind of bilateral B2B engagements. I think that's working really well. I think people are getting more accustomed on the content sharing and content consumption basis, but online networking I found to be really tough, to the point where it's almost, well, I can then just go to LinkedIn. So that's just my observation from kind of being in this, weird thing with all of you together. Now, my hypothesis around this is bilateral B2B travel is not going to bounce back to the levels that they were because it's not necessary. I think there's not just going to be a, awakening, but an expansion of physical conferencing as people realize that for the networking aspect, I think it will be more conscious traveling. It'll be more around hubs, and it'll be, I'll go to Munich, but then I'll maybe make a week out of it. And I think it'll just be more concentrated. Is that something that you share or challenge?
Well, neither. I must say, it could go either way, I think. Let's take, for instance, what COVID did to the way that we work and live, right? Immediately, we experienced that people were traveling less because they were not supposed to go to work. So they were commuting less. And then we immediately thought, okay, this will have a huge impact on, for instance, the total mileage and the amount of accidents, et cetera, et cetera. And then already in the summer, what took place is that the amount of second-hand car sales surged because people did want to go to work, but they prefer to travel alone and rather do that with their own car than with public transportation. So what you saw was something that we did not expect, and probably something unexpected will also take place around traveling to conferences. So on the one hand, when we speak to people, we hear them say, when it comes to the networking, the things that we value most at conferences is those unexpected meetings that you have at the bar or just during drinks or at a dinner, sitting at a table together with people that you did not know before. And most of the times that generates relationships that you could not been able to establish in an online environment. So that's something that they definitely miss. What we also see is that they just miss getting out of the house. And there's also like a fun part of going to conferences and traveling. And taking myself, I have the pleasure of meeting my clients in very nice places. For instance, Zurich, for instance, Munich, Paris, London. So I basically can't wait to be able to travel again. And you're right, probably I'll combine Munich with Zurich, or make sure that I'm not just flying in or out for lunch, but make sure that I have like 5 or 6 meetings in 2 days in a certain city. So there will be more efficiency for sure. And I definitely agree, the kind of things that we're now doing online, the meetings that we have using Teams, Meet, or Zoom, they are able to replace quite a few of the things that we usually do in person. So it will definitely not return as it was, but I think it's very difficult to see how it will evolve. On purpose, we plan to organize the IA Munich alongside Oktoberfest, because we are sure that people will have plenty to celebrate again at the end of the summer when things sort of return to normal.
Thank you very much, Roger. Now, I think that's certainly a safe statement that things will develop slightly different than we anticipate, right? I think that's the fun part of these unintended consequences.
Yes, definitely.
I guess I would love to draw on your broad and deep experience around both, insurers, insurtech, but also fintech that you alluded to. And you've mentioned, when your initial observation for starting DIA was that insurers lag behind banks. So maybe that could be a good start. Why is that? And maybe from that, what can insurers and insurtechs learn from fintech in your, I'd say, informed opinion?
Well, I think they can learn a lot, especially what insurance can learn from banks that relates to how fast they innovate, how they leverage fintech, how they adopt new technologies at scale, because I think that at scale part, that's something that is really missing at the insurance side. And banks do that in a way that it has a real impact for all their customers, but also on the top line and the bottom line of the bank. Think of the speed in which banks move to mobile banking, for instance, or how fast they introduce the peer-to-peer payments. And just compare that with the speed in which insurance companies embrace insurtech. Well, there's really a significant difference, right? Now, when I speak to insurance executives about innovation, really everyone agrees that insurtechs are important to accelerate innovation in insurance, but they are also quite humble when we discuss the scale on which these new solutions are being used inside their own organization, but also in terms of the visibility in the market. The impact of insurtechs on the top line and the bottom line is still very limited, in spite of all the investments, pilots, and proof of concepts. So when you would compare, I would say that insurance is like 5 to 10 years behind banking. But fortunately, the unfortunate events of the last year also resulted in a digital mind shift in the boardrooms of insurers. I think that's something that we can all agree with. So the crisis really has been a wake-up call, and most realize that it's really not an option to hit the snooze button once again. Now, having said that, all the current investments in digital are really about catching up. It's about repairing the past, but not really about taking a leap forward, creating a new future. It's just what I call deferred maintenance. Then there's a fundamental understanding among bankers, which seems to be a blind spot for most insurers. And let me elaborate a bit on that with using an anecdote. I can still remember, and probably you can do that as well, that around 15 years ago, banks were seriously considering to outsource all payments because they considered this service as a cost without sufficient attractive revenues. Well, basically that's difficult to understand from nowadays, right? Then around 2007, 2008, around the financial crisis or and also around when the first iPhone was introduced. I'm not sure which one had most to do with it. The opinions about payments switched. And there's now an implicit fundamental understanding that contact frequency with customers is an essential part of the economic engine. The more you engage, the more you add value, the more you build a relationship, and the more share a wallet. That's basically the economic engine that most banks really are convinced of. And that's something that not many insurers are aware of even. So quite a few still prefer to keep customer contact limited to the letter that they send to the customers with the annual premium increase. So there's a big difference there. It's a shame because all the connected devices, all the smartphones, all the wearables make it possible for insurers to really become always part of life and to add value on a daily basis. Now, why is there such a difference between banks and insurers? On the one hand, there are not that many insurers who are investing substantial amounts of money in innovation. Perhaps this is caused by the DNA of the whole insurance industry. The core of the business model of insurance is to look backward at risk figures. It's not really about painting future horizons. It's not about customer obsession, and it's not about building relationships. Let's say that innovation and customer engagement is not in their veins. And I'm not sure who it was, but someone once said, advertising is the business model of internet, and insurance is the business model of the Internet of Things. And I totally believe that, or better, the Internet of Things is the business model for insurance in the next decade. They just need to get out of the pilot mindset and really go for it. Basically, that's the issue there.
I don't know, Tom, do you want to go first? I have a few questions.
No, you can just go. It's I'll just add on it.
So first of all, I thought that was really interesting the way you phrase it. Content frequency is the economic engine. I do have a different, let's say, experience, but this might also be due to the fact that I have a very select view of insurance executives that I frequent, because these are usually the ones that work with us, and so they're probably more early adopters than late bloomers.
I totally agree.
By definition. So in general, I think I agree across the board. Out of interest, how could they do it? And the reason I'm asking, I remember sitting at in a reinsurance boardroom, and they said something along the lines of making insurance attractive again. And I thought that was a bit of a joke, quite frankly, because they were so far away from any form of customer engagement as a reinsurer. So in your view, or what things have you seen where you think, hey guys, this is actually a positive way and probably a workable way of increasing contact frequency? Because I have not seen anyone in my circle of friends actively requesting to have more touch points with the insurer.
Well, it basically starts with which problem would you like to solve? And the core problem of a consumer is never an insurance problem. So take, for instance, take car insurance. No one's interested in car insurance. You're interested in getting from A to B, bringing your children to school in the morning. You like to do shopping, to go on holidays, but basically that's the core need that customers have. So basically, you would need to find a way to be part of that context where the customers have their real problem, their core problem. And insurance is just a part of solving that problem rather than the only solution. And looking at those domains, basically these are the fundamentals for ecosystem thinking. I think there's a lot of opportunity to, on the one hand, become more relevant and become like a player that is part of the solutions that are offered in that ecosystem. And it's also a way to increase the relevancy. In your introduction, before we started this podcast, you mentioned embedded insurance. I think that's something that will evolve because of this development. Like just like, for instance, when I'm buying songs at iTunes, I just pay by click a button. When I take a ride with Uber, I'm not paying at all. I already did that. So payment is totally embedded and is virtually invisible to customers. But I can assure you that the companies who render those services to the kinds of Uber and, well, for instance, also Airbnb, etc., they really favor from being part of the whole context in which people enjoy their mobility or enjoy their holidays, rather than just selling a travel insurance or a car insurance. So I think that there's a lot of opportunity.
I would like to add something, because let's say on the one hand you have a very technical discussion about customers and what you could do, etc. But what I find interesting is that, let's say, in the end, if you just zoom out, it's more or less the same domain. So, and you see this, for instance, in asset management in a very clear way, that there's not a huge difference in asset management if you're an insurer or a bank. But what I find striking is that although you're in the same domain and you would be really, let's say, glad to have much more time, because these are exactly the same developments going on. It's also, let's say, virtual stuff, and it's not that, let's say, people lying in front of the stores to have a new bank account. If you would compare this with waiting for the Apple Store for the new iPhone, you don't see this need of urgency. So how is it possible? And when I discuss with, let's say, people in corporate boardrooms, etc., I'm always amazed that on the one hand you have this very well educated people with all the MBA titles and courses and attending conferences, etc. And just to take an example of our last post, that when I saw the presentation of Cover at the DIA in Munich, I thought, and he just showed how fast he just was able to set up a website and a product and the payments, etc. I would thought, okay, the corporate people attending the conference there will buy this company immediately. And then nothing happens. And on the other hand, you see, and I asked this question before, you see Mark Zuckerberg watching WhatsApp or Instagram or this kind of companies, and those people immediately approach these small companies and then being willing to pay billions for, let's say, 30 people who built yeah, we would say a gadget at that time, or Google did with YouTube, etc. But you also see it in the financial sphere with, let's say, sometimes MasterCard or Visa doing really bold moves, and then in the insurtech or in the corporate boardrooms of insurance companies, there's still a kind of understanding. No, it will just take our time, and we'll also do some innovation.
Well, I think that there's a change going on there. Like you mentioned the sense of urgency. When I mentioned 2007 for banking, I think that also sort of coincided with the financial crisis. And like that was for many banks also a moment where they had to severely cut costs, think about cutting up their whole operations. And like it really became different from that point on. Well, something similar happened with many insurance companies over the last year, especially those who really relied on their physical channels in distribution and also have forgotten to digitize those physical channels over the past period. They immediately had a problem because when governments ended face-to-face meetings, it basically stopped also their revenue streams. And that was really the wake-up call. And then they really experienced that whatever they thought always had been a differentiator, their face-to-face channel, was now not even a qualifier. And it was not about just a mere channel, it was really about the business model that was not future-proof and not agile enough, not flexible enough to adapt to the new situation. So basically, that's what took place. As a result, what they invest in are things that actually solve those very operational problems. So these are things that relate to being able to do business more remotely, giving more digital support to their brokers and agents so that they can really create like a seamless process flow. But in my view, that is really more like repairing the past. It's more like interfacing with the digital age, but not really transforming. I think, Nick, something that you must have experienced as well, since that's one of the things that you also have offer, is that we quite often see that the efforts now are, for instance, changing a wet signature into a digital signature. Whereas that's not really solving the problem. The problem is, how do we establish identity? And how do we do that digitally, which is something different than putting a digital signature on a piece of paper, right? So these are the things that really happen. Now, going back to the contextual thing, and maybe to highlight a bit more on how that relates to what we've experienced. I already mentioned, and I think that we all agree, that COVID really changed customer behavior. And it means that insurers, if they want to be successful, of course, they really must understand those changes in customer behavior and turn that customer behavior understanding into propositions and experiences as well that really strike the right chord. And to do that, we actually identified 4 key areas, that key trends that insurers should tap into to reimagine customer relevancy. And one of them, it's an obvious one, it's health first. I think we all experience that there's nothing of greater importance than life and health, and everyone really put their money in there as well. And what we see is that insurers already experience a growing interest in life and health plans. So we expect that market to grow significantly in the coming years, but not just your regular life and health plans. People really want to be assisted in improving their lifestyle and helping them to exercise more, to eat healthier. And there's a lot of room there to go beyond what you usually do by just offering covers. It's adding all sorts of preventing and proactive services on top of the covers. So think of data-driven platforms that are combining self-tracking data and all sorts of incentives. And what we see is that quite a few insurers are already exploring this, of course. So for instance, Irish Life is doing that together with Dakadu from Switzerland. Generali is doing that with the Vitality platform. And these are just to mention a few. We also see that taking place in things around home. We already discussed the shift in mobility, and basically it means that we'll experience a different way of living and working. And what we see is that over the past year, many people have invested a lot in their homes, buying new furniture, getting their Wi-Fi upgraded and things like that. Also because they had to work at home more and more. But at the same time, we all realize that homes are simply not equipped to work at home safely. Things are just not secure. So from that perspective, what we see is that the scope of home insurance needs to be broadened already on the short term. So we expect new propositions combining home insurance, IoT, the services that you can offer, personalized services based on what you sense through the sensors, and also include cybersecurity. So it's these kind of platforms that will evolve and that will make you more part of life as an insurer. So it's not about being more attractive, it's about being more relevant and being more present in the daily life of customers. And there's really a lot of opportunity there, thanks to what IoT has on offer.
You've mentioned, those were 2. You've mentioned, I think, 4. Can you highlight the other 2?
Yes, the other 2 trends. The third one is unprecedented uncertainty. What we are experiencing currently, there's a lot of uncertainty, for instance, around the economic situation in countries, for instance, about their job security, but also about for instance, what we currently experience about the health situation, about vaccines. Are things good, not good? What should I do? And not to forget also about the quality of information. There's a lot of disinformation and misinformation. We can still, I think, remember that there was a certain president that said it would be very good to use detergent to solve all your COVID problems. And also think of all the conspiracy theories. I recently read some research that 15%, 15% of the population really believes in conspiracy theories. So there's really a lot of opportunity there to become a beacon of trustworthy information. And the fourth is that empathy in everything is something that we should try to accomplish. In times of need, like we currently experience, people crave for institutions that care. And that is very much the case also for insurance firms, of course. So, it's about listening to consumers, helping them out in difficult situations, lending a hand. And especially when it comes to technology, we should try to find ways to really empower the frontliners of insurance companies with the right tools, with the right artificial intelligence, to really create the best of both worlds, to combine the talents of artificial intelligence with the talents that computers still do not have, which is empathy.
Thank you. That's, we could go on and on. Conscious of time and the other aspect that I really want to, or Tom and I really want to pick your brain on. If it's okay, if we kind of switch tact a little bit and kind of looking at insurtech models and investment. In your point of view, which insurtech models work or would you personally invest in and why?
Well, a funny thing is that we just did a study together with McKinsey. And that study is called The Pulse of Insurtech. And for that study, we spoke to more than 100 leading insurtechs and investors from around the globe. And to get their perspective on the future of insurtech and of course, what would be the best things to invest in. And first, of course, we already discussed that what we see is that COVID triggered more demand for things that incumbents need today. So the things that they are used to, that they would like to have to retool their business. So you would expect that to stay for a while. So you would think that those would be nice things to also invest in. We also concluded in our study that insurtech is at the turn of a new chapter. And this is where things become more interesting, also to determine where you would like to invest in. So starting on the demand side, we see that incumbents prefer to team up with more mature insurtechs who already have a track record, who have a good team on board, with who have shown that they are good entrepreneurs. And insurtechs that really help them to transform or innovate critical business processes, of course, require that you will do that with a more mature insurtech. And this sort of coincides with what we also see among investors. So there are no signs of a shortage in capital, but there is especially a lot of later stage capital available in the market. Private equity funds and new corporate investors, for instance. So we see a strong increase in growth investments. But those investors are reluctant to invest in too early stage companies. So for the near future, we should expect less funding availability for startups and for smaller companies. So scale becomes really essential for clients as well as for investors. And there's a third reason why scale is of interest for insurtech entrepreneurs, and that's for their own benefit. It generates significant financial benefits for them as well. Because most value creation is realized during the scale-up phase of the company. McKinsey also researched that, and they established that 34% of the value creation comes through the build-up phase of startups, while 66% of the value creation takes place in the scale-up phase. So scaling is key, and that also is relevant for growth companies that are growing 100% or more have valuations that are double or triple of companies with growth rates of 50% or less. So valuation seems to be a function of the size and how quickly an insurtech is growing. So getting back to your question, where would I invest in? Entrepreneurs, teams who have a clear vision and know how to scale their business. So how do you help incumbents to speed up their digital transformation? How do you improve or renew parts of the value chain? What is your impact on the top line and bottom line of the incumbent? So it's more than just an idea. It's really about impact. And how to scale starts with understanding what is your real addressable market. Building a valuable company requires addressing a big market and a big problem in that market. I think, Nick, you in your introduction, you already mentioned that as well. You need to go for the big chunks. That's basically where you need to focus on. So having said that, you could say that insurtech sort of became mature. It's about adding value. It's about creating scale. So, like I mentioned that we first launched DIA in Barcelona in 2016. So 5 years later, insurtech as an industry sort of left the startup phase. The pandemic, and especially how the events accelerated the digital mindset among incumbents, also marks the start of a new chapter in the insurtech in history, I would say. So now, where would I invest in? I could also answer that question from the perspective of an insurer. And from an insurer side, it's tempting to invest in those insurtechs that will help me to pick up the pace of digital transformation. So the things that would help to repair the past. But yeah, I would rather think about the investment opportunities that would help me to become much more relevant in the next period. And those would be, I already mentioned the platforms in health, the platforms in home. And of course, there are similar platforms in mobility. And what all these platforms have in common is that they all center around data. And that's basically one thing that they have in common. They all have those new data streams at the core. So from data from connected homes, from data from wearables, from data from connected cars, from smart cities, from smartphones, etc., etc. So what we would need to look for is, if I would be an insurer, to invest in insurtechs that help me to create such platforms or be part of such ecosystems. So insurtechs that give me access to new data streams, to AI and other capabilities, to new customer proposition, basically new ways to monetize all that data. That would be the insurtechs that I would go for if I would be an insurer.
Thank you for that. No, I think just one follow-up question, and I know it's tough to without going into detail, but do you personally have a preference from a model perspective, high brush, full stack, MGA, technology enabler? Do you have a preference, and why?
Two things. I do things in all three areas. That has to do with the fact that looking at MGA, I think those models are the fastest to go to market, the most flexible, of course, like less requirements from capital perspectives and things like that, less licensing problems, etc., etc. And they're usually also a first good step to see whatever kind of direction you want to take. So that's one thing. Full stack, there's already a lot of them. So that's one thing. So things need to be very distinctive. And those distinctive things could be, for instance, the focus on specific segment. Personally, I believe there's a lot of opportunity to have a new renaissance in bank assurance. I think that, for instance, like PSD2, the European regulation that opens up banking data to third parties to become more innovative, is hardly tapped into by insurers, whereas it gives so much opportunity to re-innovate. And for instance, looking at all sorts of wealth management solutions that could really benefit from that, and which of course is very close to what insurers have on offer. So full stack solutions that would cater, for instance, to such a channel is something that you would definitely need to have a close eye on. And you mentioned a third?
Basically the tech layer, the enablement, right?
Yeah, like the enablers, of course, like the enablers, it's the question of big chunks. So looking at where most of the money goes to, well, like think of claims, underwriting, basically these are two like areas that have such a significant impact on the total cost column of a firm. That
Totally.
yeah, there's a lot of opportunity there as well. But again, I would really favor having the most advanced technologies in terms of data, because I think that using those technologies also to leverage also in other parts of the company is a great benefit, of course, right?
I mean, anyone trying to connect various high volume data streams to your data model in a policy administration system knows that there's some bridging capabilities being met, and it would take this too far, but would love to pick your brain offline around renaissance of bank assurance and why I think it cannot be full stack. It needs to be MGA. Because of the breadth of the product portfolio that you can push into a bank and the license requirements across the insurance. But that would, I think, nerding too much down. Thomas, that's not.
But I totally agree. Like for me, it also has to do with the fact, okay, if you start MGA, you can still pivot your strategy to whatever scenario is most feasible and most profitable in the long term. And like I think like the market, looking at the size of the insurance industry, looking at the size of all the big chunks, looking at the fact that they're like 5 to 10 years behind compared to other industries, the opportunities to monetize that are so massive that like being a challenger is fun, but like having 100,000 clients doesn't cut it if you really want to have a real impact.
Absolutely. God, this is conscious of time. Last question. If you were the CEO of an incumbent insurer, what would your first 100 days be like?
First 100 days. Okay, well, like I think that
I've read it somewhere. It's like what a president does, right? I think that's
okay.
where you set your path.
I think we covered already a lot. We already covered a lot of ground. So let me focus on something that might be different, right? So of course, you need to make sure that the business stays afloat. You need to make sure that operational excellence is there. It's very essential, but in my view, it's really a qualifier, and it's not enough. So you also have to make sure that you remain relevant. I already mentioned the kind of platforms that you would like to have in place. It's really about reconsidering not only processes, products and services, but distribution and operating models as well. And you also need to think of new business models and new revenue models. Now, when we speak about digital transformation, in my view, transformation implicitly says initiatives should be significant. And if you're an insurance company with, say, 1 billion in sales or in premium, transformation means that a serious innovation project should have an impact of at least 100 million. So, and I see too many small projects in insurance companies, pilots, proof of concepts, in product groups that are relatively unimportant, or in parts of the value chain where the gain is very limited. I once called this the curse of agile working. I'm all for agile working, but in too many insurance companies, this resulted in taking no time to think about the big picture and starting all sorts of small projects that are independent from each other without any gravity, and focusing on weekly sprints on UX details, hoping that something beautiful will pop up. But in my view, it starts with the big picture and thinking about big impact. So big tickets, that's something that is important. I really would wish to use all that creativity, intelligence and efforts that now go to waste in all these small scattered projects in initiatives that really transform. So my first 100 days, I would certainly end a significant number of those small, insignificant projects. And of course, like in my view, you should always leverage the latest technologies and insurtech partnerships wherever you can. already because of the time frames that are so compressed nowadays, apart from the specific knowledge and experience that insurtechs have. Now, what I see, and probably what you experience as well, is that in many organizations, phenomena such as the not invented here syndrome or the corporate immune system are ruling. In many organizations, it's still considered a sign of weakness to say that you cannot develop this particular solution yourself and perhaps someone else should do it. And I would really like to put an end to that by changing what kind of behavior is the norm. For me, it's really about open innovation. So it's about open innovation, and it's about really going for the big ticket items.
Awesome. Thank you. I thought that was, I like that a lot around what was it? The curse of agility? Was that?
Yeah, it's the curse of agility. I've done a large number of projects using the agile way of working, but you always need to take at least a month or 6 weeks to really set the dot at the horizon where you want to go to. But many people, they think that agile working means starting off scratch, brainstorming, involving the whole company, and you end up, one of my former colleagues once said that a camel is a horse designed by a committee, and basically that's where you end up with.
Yeah.
That's a nice one.
I think, Roger, thank you so much for your insights. I would not have known where to cut this conversation short, so I'm very happy that you bore with us on this one. I'm very happy. Any further comments that either Tom or Roger, you guys would like to share before we wrap this up?
Well, first of all, I really like those kind of the kind of discussions that we have, because it's also it gives me all sorts of new ideas as well. And so thanks again for the invitation.
Pleasure. Tom, any last words?
No, nothing to add. It was a nice conclusion about the agile way of working.
Perfect. Gentlemen, thank you so much. To all our listeners out there, thanks for tuning in, and be safe. Take care. Bye.